Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Free State Department of Education in collaboration with Pagama Research and Development. Grade 12 learners, once more welcome to our today's lesson. The topic for today will be the cash flow statement as well as the financial indicators. Now, what are we going to be looking at basically on the cash flow statement? We are going to be tackling some sections in the cash flow statement, preparing some notes in the cash flow statement, and we are also going to be doing some calculations under the financial indicators. Our next lesson, grade 12s, will be on the analysis and interpretation of financial indicators, or of financial statements rather. Right, my name is Mr. Buthelezi S. Now, grade 12s, let us look at the goals, the objectives of this lesson. Before the end of this lesson, grade 12s, we need to be able to understand the structure of the national paper, paper 1, the NSC paper 1. We should understand the format of the cash flow statement. We should also understand the format of the notes to the cash flow statement. We should understand the different formulae of financial indicators. We are also going to be able to prepare the cash flow statement and the notes, as well as the calculations for the cash flow statement. We are also going to be able to calculate the financial indicators for companies. Right, now, grade 12, let us look at the structure of paper 1. What do we expect in our paper 1? Remember, you are going to be writing your paper 1. In accounting, we have two papers. There is paper 1 and also paper 2. Now, what are we expecting to see? These are most of the topics we need to expect in our paper 1. Topic number 1, we are going to be having two financial statements. What are those financial statements? We are going to be having the statement of comprehensive income, or we may also have the correction of net profit and the statement of financial position, as well as the note for these statements. Remember, the note for these statements may also be there in the question 2. Right, another topic we expect to see is the cash flow statement and the note for the cash flow statement, as well as the notes for the statement of comprehensive income and the statement of financial position. We also expect to find our financial indicators calculations and analysis of the cash flow statement. Number 3, we expect to see the analysis and interpretation of financial indicators based on the previous question papers. This used to be question 3. And then what we also saw in the previous question papers, NSC papers, question 4, we expect to see our corporate governance. Remember, under corporate governance, some of the topics we may talk about, these are the auditing topics, where we are going to be looking at the different audit reports. And then we can also expect to see the King Code reporting, as well as other topics or subtopics under corporate governance. Right, in our next lesson, we are going to try and tackle analysis and interpretation of financial indicators together with corporate governance. So we expect to see analysis and interpretation of financial statements as well as the corporate governance. Now, we are going to now look at the format of the cash flow statement, how it looks like. When you look at our format of the cash flow statement, it has three activities. The first items would be the cash generated from operations, the interest paid, taxation paid, the dividends paid. Now, what are we noticing here, grade 12? We notice that the interest paid, tax paid, dividends paid are all in brackets. What does it mean? It means that all of these are always outflow. And then we have the cash generated, which can be an inflow or can be an outflow, depending on the result from our cash generated total. Right, so all of these items are under the operating activities. Where did we get the figures? We just use random figures. We just estimated figures for us to be practical about this format. Now, how did we arrive at the 893,800? We have taken the 2,427,500. We subtracted the interest paid of 240,000, subtracted the 508,700. We also subtracted the 785,000. And then we arrived at an amount of 893,800. Okay, now, grade 12s, what we're going to do, we are going to break down these amounts. How did they come about in arriving at the cash generated amount, interest paid amount, tax paid amount, dividends paid amount? We are going to look at the breakdown in theory and also in practical sense, so that everyone gets an idea on how to prepare the cash flow statement. But now, grade 12 is very important. Before you write your examination, please ensure that you know the format of the cash flow statement. Now, let us look at the investing activities. What do we expect to see? We expect to see more than two of these items. We expect to see the purchase of tangible assets or fixed assets. This is always an outflow. Always an outflow, because we are buying. When we buy, money goes out. And then how do we indicate outflow? By the use of brackets. And then there is also a sale of fixed assets. The increase in the investments, we are going to break this into pieces to say that how do we calculate purchase of tangible assets? How do we calculate the sale? How do we calculate the increase in investment, the decrease in investment, so that we don't just memorize the format, we also understand where to get figures and how to calculate them. Now, the sale will always be an inflow, and then the increase will always be an outflow, the increase in investment, and then the decrease will always be an inflow. Okay, so this one is outflow, inflow, outflow, inflow. Okay, now these are just some of the figures. For the increase in investment, it's 0, because for some businesses, it will either they decrease their investment or they increase their investment if they only have one investment. Right. Now let us look at the financing activities. Also, there are 3 things happening. There are 3 or 4 things happening under the financing activities. Now, the first one will be us selling shares. When we sell shares, that amount, additional shares sold, becomes our proceeds from shares issued. And then we also have the proceeds from the repurchase of shares. Now, the proceeds from the repurchase of shares will always remain to be an outflow. Now, the proceeds from the shares issued will always remain as an inflow. And then we also have the increase in long-term loans. Whenever we decide to increase or to borrow more funds, that becomes an inflow. Grade 12s, I hope we are all getting what we are doing here. This is just a quick recap on our cash flow statement. Right, we also have a decrease in long-term loans. What's happening here? When we decide to pay back these loans. So this will always remain to be outflow because we are paying back. And then we come to our net change in cash and cash equivalents. There are two ways of getting net change in cash and cash equivalents. We can take the operating activities as an inflow as it is, 893,800, and then subtract the investing if it's an outflow. If it's an inflow, we add. And then we also add here the financing. As you can see, it is an inflow, it's positive. So we add, and then we get our net change. That is step number one. Step number two, we can move to the last two items. What do we have there? There's balance at the beginning for cash and cash equivalents. Okay, this is for cash and cash equivalents. This is also for cash and cash equivalents. And we also have the balance at the end. But what you need to note, that the bank overdraft balance must always be subtracted. We always subtract a bank overdraft before we can determine the final cash and cash equivalents for at the beginning or at the end. Now with these two figures, because they have the same sign here, then we are going to subtract 136,500 minus 600,300, and then we get 463,800. Okay. Now, this is our format for the cash flow statement. So it's important that you know how to calculate these figures and where to get the amounts to record under your cash flow statement. Your final exam papers may not ask the full cash flow, or they may ask the full cash flow. So if they only ask the operating activities, you should be able to do only those operating activities. If they ask only the financing activities, you should also be able to do that financing activity. So you need to prepare for a full cash flow statement or a breakdown of the cash flow statement. Now, let us look at our notes now. The first one that I promised you we are going to tackle, it is the one for cash generated from operations. Now, how is the format looking like? If you can just check there, the first thing we need to take into account will be our net profit before tax. Where do we find this amount? We find it from our statement of comprehensive income. Okay? We find this from the statement of comprehensive income. That is where we get our net profit before tax. So when you prepare your statement of comprehensive income, that amount that you get before subtracting tax will be recorded under the cash generated note. Number two, you are going to have your depreciation and your interest expense. Now, these two amounts will be added together. We also find them in our statement of comprehensive income, or our loan statement. We find our interest expense, or our note number 3. Remember, this depreciation is the depreciation for the vehicles and depreciation for equipment. So these are two depreciations added together. When I say depreciation for my cash generated from operations, I refer to the two depreciations. Okay. Now, how do I get the next item in blue here? The operating profit before changes in working capital. How do I get that? We take our net profit before tax plus the 602,500 Where is that coming from? It is the depreciation plus interest expense. Then the answer becomes 2,452,500. So that is our answer now. Now, in some exam papers, they don't give you the top part. They will just give you the amount of operating profit before changes in working capital. So it means that you need to start from there, because that amount is the combination of profit before tax plus the two items, which is the depreciation and the interest expense. Now, very interesting. We're now coming to the net change in working capital. What are these working capitals that we are talking about? The first working capital will be your inventories. Second working capital will be your receivables. Your third working capital will be your payables. We are going to elaborate in some of these at a later stage. In the upcoming slides, we are going to be elaborating on the three working capital. Now, please remember, it won't remain a decrease every day. At times, it can say increase in inventory. A decrease in inventory, we are going to explain that right now. So it has decrease in inventory. Sometimes it can say increase in inventory. Next one would be a decrease in trade and other receivables. Sometimes it may say increase in trade and other receivables. Decrease in trade and other payables. At times it may also say an increase in trade and other payables. Now, when we take these two, what we have done here, we said 27,500 plus 32,500 minus, and then we got an answer to be 25,000, which is an outflow because payables is bigger than the inventories and receivables. I would explain later on the issue of signs why this one is an inflow. As you can see, no bracket, inflow again. And then this becomes an outflow. Now, how do I get my cash generated from operations now? We take our operating profit before changes in working capital, 2,452,500 minus 25,000. At times, it can be a plus, depending on the answer you got when you were adding and subtracting the working capital. Meaning it can be 2,452,500 plus if that amount was an inflow. But in this case, this amount is an outflow. So we have to subtract it. We just decided to use random figures, remember? When we express or explain the format or demonstrate formats, we use random figures so that it becomes realistic. Now let us move on. As we have said here, the working capital can also have increase. I've already elaborated on this one. Working capital can also have increase. Now, I want us to elaborate. Let us unpack the working capital in the cash generated from operations. How do they work? This is what you need to know now. If there's an increase, how do you determine an increase? A balance, if it's 2,000 this year, the following year is 5,000, meaning it's moving from 2,000 to 5,000. That is an increase of 3,000 rand. That is how you find an increase. How do you determine a decrease? A balance was 4,000, now it's 2,000. So there's that decrease of 2,000. Meaning we compare last year, 2023, and this year, 2024. So the comparison would be on recent years. Now, let us look at this one. An increase in our inventories. What caused the increase? It was caused by us buying stock, because inventories means stock. When we buy more stock, then there will be an increase in inventory. What is an implication to our cash? Then this becomes an outflow of cash. Cash will be going out. So it means then this must be indicated using brackets. As we've indicated here, all outflows are indicated using bracket. For an example, if an outflow is 200, we put 200 inside the bracket. But looking at the second one, a decrease in inventory. What resulted to a decrease in inventory? I want us to reason before we can say inflow, outflow, inflow, outflow. A decrease in inventory was caused by us selling stock. Now, what is an implication to our cash? Because we are doing cash flow statement. Our worry is on cash. This has resulted to our cash to flow inside the business, meaning there's no money coming in or whenever we are selling stock. So this is an inflow of cash. Now, inflow of cash, no bracket. Let's look at the receivables now, trade and other receivables. If my receivables are decreasing, what is causing that? It is caused by debtors paying back whatever that they are owing the business. So that becomes what? An inflow of cash. Coming to the next one, an increase in receivables. It means that we sold more on credit to our debtors. If we give out credit, it means we are giving out money to them. That becomes an outflow of cash. Grade 12s, I hope we are together so far. I know this may be a challenge, but now we are clarifying this. Remember, we are on our last push. We must make sure that we master and we close all the gaps that we used to have. Right, now let us move on. Now we are talking about the payables. Payables are people or suppliers that we owe as the company. We owe these guys. Now, when the payables are increasing, it means that we have received credit. If you receive credit, it means you have received money. Now that becomes an inflow because you are receiving money. So this is an inflow of cash. Now, a decrease in payables, it means that you are paying back the credit that was granted to you earlier on. Now, this will now become an outflow of cash. Outflow, as we said earlier on, it is indicated by the bracket. 200 for an example. Now, grade 12s, I hope here everyone is clear. Just to give everyone clarity on how to calculate the net change and how to decide on the sign. Now, grade 12s, we are moving on to the next part of our cash, of our working capital in the cash generated from operation. There are some terms and conditions. I call them terms and conditions. There are items that we must exclude as we calculate our change in the receivable as well as the change in the payables. Under receivables, we must always exclude SARS. You will see as we work this one out that SARS is always excluded. And why do we exclude SARS? We are going to talk about that just now. Now, again, under the net change in trade and other payables, we exclude two items. That will be SARS, income tax, as well as the shareholders for dividends balances. Sometimes we'll have to exclude accrued expense, interest expense balances. Meaning, if there is an accrued expense written in brackets, interest expense, we also exclude it from our calculation. When I say exclude, it means you take the total minus those items. Right, now, as we have said here, why are we excluding these items? Just going to go back a little bit. Why do we exclude these items? This is because they are dealt with separately. there are notes for these items. So if we include them on the receivable and payable and also do the calculation later on, it means we'll be double counting. So we want to avoid the double counting. That is why we exclude them. Now, let us look at the interest paid. Remember, from our format of the cash flow statement, we had operating activities, we had cash generated from operation. We have sorted out the format of it and how to calculate figures there. Now we are looking at the second one, which is an outflow at all times, which is the interest paid. What do we need? Because grade 12s, you can't calculate interest paid if you don't know which figures you need to calculate interest paid with. And then you must know where to get those figures. Now, there is the gap I want us to close. I want us to close that gap because some of you know how to calculate interest paid, but you don't know which figures to use to calculate interest paid. So you need to know which figures you should use to calculate interest paid. And where do we get those figures? Okay, now let us look at this. For me to calculate interest paid, I would need to have a balance at the beginning for accrued, but this accrued expense must be written interest expense. If it's not written interest expense, then I don't consider it as interest paid. And then number 2, from these, I would have to add it together with the interest expense. Where is this interest expense coming from? It comes from my income statement. This comes from my balance sheet current liabilities. Okay, which is the trade and other payables. And then lastly, I'll have to subtract my balance at the end for accrued expense. So we subtract these. So meaning, where do I find this again? I'll find it from my balance sheet in my current liabilities, note number 9, trade and other payables. So for me to get interest paid, I may say if here is 2,500 plus 500 minus 1,000. So this answer becomes 2,000 rands. Okay? So 2,500 plus 500 minus 1,000 rand. And then my interest paid becomes 2,000. But often at times, you may be given only the 500 rands, meaning you'll say 0 plus 500 minus 500. So the answer becomes 500. Our previous question papers are showing us that we are only given the interest expense, but not to say that you may never be given accrued expense, interest expense. If that is given to you, you need to know how to deal with it. Okay. Now, grade 12, let's look at the second part. I'm going to my tax paid. Which figures do I use to calculate my tax paid? Let us look at that. Which figures do you need? Can you now talk about that for a few seconds? Some of you got it right. Let us look at those figures. We need the opening balance for SARS income tax. And then we need our income tax. It makes your life very easy if you just put a minus sign on the income tax amount. And where do we get the income tax amount? From the statement of comprehensive income. Where do you get the SARS balance? From the balance sheet, either under receivables or under payables. So you can get this under receivable or under payables. Same thing applies to the balance at the end for SARS. You may get it under receivables or under payables. So these items may have unpredictable signs depending on the side they are at. Then you'll have to use the correct sign. But we are going to elaborate on these soon. Okay. Now, can we now look at the tax paid? How is tax paid calculated generally? How do we calculate tax paid now? I want us to be practical. Can we now calculate? The question says here, calculate tax paid. How do we calculate our tax paid? what are the three things you need to calculate tax paid? Number one, I need my opening balance for SARS, it's there. I have my checklist. I need my closing balance for SARS, it's there. And I need my income tax. So we can do it in two ways. We can use a T account or a straight line method. If we use a T account, it becomes easy. How is my T account going to look like? This is my tax paid T account. What do I have on my left-hand side? Left-hand side is my debit side. Very important. My debit side is also my receivable side. And it is also my positive side. Okay? On the credit side, on the left-hand side, sorry. The other one is the left-hand side. On my right-hand side now, I have my payable, which will also be a minus. Please, first thing you need to do is to decorate your T account so that it becomes easy for you to work. Now, what do we always start with? Which figure do we prioritize? The figure we prioritize will always be the income tax. Don't forget, we always start with the income tax. I'm putting my income tax in the middle there. So the tax amount, how much is the tax amount? It is the 300,000. That is what we have. There is our tax amount. Number two now, I need to go to my table and check which one is my balance at the beginning, which one is my balance at the end. I have 2 years. I have 2023. I have 2024. Now, 2024, we all agree it's our balance at the end. 2023, it's our balance at the beginning. Let us see, where is the balance at the beginning now? Balance at the beginning is on the debit side. It's indicated. If they don't write debit side, they may write receivables. If they don't write receivables, then they will say SARS owes the business. The money claimable. Money claimable. Now, meaning I'm going to do what is given to me. I will have my balance brought down on my debit side. How much is my balance brought down? 70,000. So 70,000 becomes my opening balance. Now, my closing balance, what is indicated on my closing balance? It's indicated also as debit. What does that mean? It means the balance after the total. This will be my totals. Meaning my balance there, the closing one, is indicated as a debit. 90,000. Now, where is that balance coming from? If it's a debit here, where is it coming from? Obviously, if it's a debit on the credit side, a balance carried down must come from the debit side, right? Now, this balance, remember, it's coming from the top here. Okay? Now, this is my balance carried down. Okay? Or you can write it under the total tax paid. So it's 90,000. Now, what are we having now, grade 12s? We are having the 2. We are having what? The 2 balances. Now, we have 2 amounts under the credit side. We have 1 amount. Now, what are we doing in an easy way now? We are taking the debit side amount. Remember, the debit side amount always has a positive side. The credit side amounts, let me just write it here. Debit has a positive sign. Credit has a negative sign. When I do my calculations, I will say now 70,000. When I punch my calculator, minus, because the 90,000 now we have proven it that it comes from the credit side. Minus 90,000 minus the income tax of 300,000. Now let us check how much we get here. Let us calculate together. 70,000 minus 90,000 minus 300,000. Our answer becomes an outflow of 320,000. Right? Now it's 320,000. So this is our tax paid. What are we learning from this, grade 12s? We are learning that the closing balance, if it's shown as a debit side on paper, then when you write it down, when you do your calculation, it must be on the credit side. I am going to write down what I'm saying now. Let me just write down. This is our rule that we have developed here. Closing balance for SARS is an opposite of what is shown on paper. For an example, what am I saying here? Closing balance of SARS income tax is an opposite of what is shown on paper. If it is shown as a debit side, meaning when I do my calculation, it will be a credit side. Please remember that rule. If my closing balance is shown as a debit side, then when I do my calculation, I need to show it as a credit side. We are going to do the next scenario now. Please remember that rule. Closing balance shown as a debit side, it will be recorded as a credit side when I do my calculation. Closing balance shown as a credit side will be recorded as a debit side when I do my calculation. Okay, then the rest will keep their sides. Now let us look at scenario number 2. Remember on scenario number 1, what we have done, we said 70,000, which is positive, minus 300,000, because 300,000 is always minus 90,000, because 90,000 was shown as a debit. When I record it down, when I do my calculation, I will show it as a credit. Remember, a credit is minus, a debit is a plus. A credit is a minus, a debit is a plus. That is what we need to have so that this becomes a little bit easy. Now, please ensure that you score marks here. As long as you know the number of figures, number of figures that you need to calculate your tax paid, then you are not going to score 0. You can even score 50% of those marks. Okay. Now let us look at scenario number 2. Remember, what do we need? We need 2 balances of SARS. We do have the 2 balances of SARS. We also need income tax. Now, remember our rule? We said that a debit is a plus, a credit is a minus. And then we also said that if a closing balance is a credit, then record it as a debit when you are calculating. Closing balance is if a closing balance is a credit, then record it as a credit, as a debit when you are doing your calculation. Now let us do our calculation here. We can have our T account, income tax always on the credit side, 250,000. This is a minus side. And then we look at our opening balance. It's written as credit, so we put it on the credit side. Closing balance is shown as a credit. It means where do we record it? On the debit side. Okay? Now, what are we doing? Therefore, when we do punch our calculator, we're going to say 95,000, which is on my debit side. As you can see here, minus 72,000, minus 250,000. Now, let's see how much we're getting here. 95,000, minus 72,000, minus 250,000. Then our answer becomes an outflow of 227,000. Now, grade 12, I hope here it's clear. Remember, what is on the debit side, it's a plus. What is on the credit side, it's a minus. But it is easy to score marks here because you know your income tax is always a minus. Anything on the credit side, it's always a minus. Anything on the debit side is always a plus. But I know where we may have a confusion, it is on the closing balance. Remember, if a closing balance is shown as a credit, then you must record it on the debit. If it's shown as a debit, you must record it on the credit to make your life easy in this calculation. Okay, we have proven that. Why are we doing it like that? The balance carried down, balance brought down. Okay. Scenario number 3, let us look at this. We have the 3 items we need. How do we do this now? We can do it in a T account format. What do we always start with? We always start with the tax. How much is our tax amount? 230,000. Where is the beginning? Beginning is 2023, ending is 2024. Right. Our beginning is shown as a credit. So we start there. Balance brought down, 72,000. Our closing is shown as a debit. If our closing is shown as a debit, then you must record it on the credit. So it's 95,000. Now, as you can see, all of them are on the minus side. On the debit side, on a plus side, which is my debit side, there is nothing. So it is 0 minus 72,000 minus 230,000 minus 95,000. Okay? Can you see? All of them are a minus. So it's negative 72,000 minus 230,000 minus 95,000. Okay, let's do that again. 72,000 minus 230,000 minus 95,000. Then our answer becomes 397,000, which is an outflow. Remember, creditors, what is on the debit side is always a plus. What is on the credit side is always a minus. But other learners may prefer to work in an opposite manner. Okay? Make the credit a plus, make a debit a minus. Meaning your calculation would say plus 72,000 plus 230,000 plus 95,000. It is still fine as long as your final answer remains as an outflow. This is scenario number 3. Now let us look at scenario number 4 here, which is our last scenario. We are calculating tax paid here. How do we calculate tax paid? We need 3 items again. We need our SARS at the beginning, SARS at the end, and income tax amount. You can use your T account to calculate. T account on the debit, it's a plus side, which is the receivable side. On the credit, it's a minus side, which is the payable side. Okay. Now on the credit side, we have our income tax. We always start with the income tax. You need to observe on how we have been doing these cases. So 270,000. And then opening balance, which is the 2023, it is shown as a debit. So we record it on the debit side, 72,000. And then the closing one is shown as a credit, what is the rule about the closing balance? Some of you are getting it correct. The rule is, if it is shown as a credit, you must record it as a debit. Okay, meaning the 95,000 will come on the debit side, which is our closing balance. Now, let us punch it on the calculator. How do I punch it on the calculator? I would say a positive 72,000 plus 95,000 because they are both on the debit side. And then minus 270,000. Let us punch it on the calculator. 72,000 plus 95,000 minus 270,000. Then we get 103,000. This becomes our tax paid. Grade 12, this is a very easy part to do. Please ensure that when you get your paper one, you don't make a mistake of not writing this question. You must always answer the question on tax paid. We have seen it in the previous question papers. It was kept on coming. So please do expect the tax paid calculation. Now, grade 12s, we are done with our scenarios for the tax paid. We have 4 scenarios. One of them we are going to see in our final exam. We may see it in our final exam. Okay. Now, we are looking at the dividends paid. What is dividends paid? The money we've paid for our dividends. There are 2 methods of calculating dividends paid. We may be asked to calculate dividends paid. The first method now, it's a method where we take the opening balance of shareholders for dividends plus the interim dividends. Okay, this is an easy one to do. Interim dividends, remember the other name for it, it is called the paid dividends, meaning these are the shares that we have, the dividends that we have declared and paid during the year. This is the first method. Our answer becomes our dividends paid. Second method, which is a little bit longer, but not too long. The items we need may be the dividends at balance at the beginning, shareholders for dividends at the beginning, the amount we've been owing for dividends at the beginning, plus the total dividends for the year. Where are we getting this? The one similar to the one we get when we do note number 8, retained income. How do we get that? Interim plus the final dividends. And then we also subtract our final dividends, which is the shareholders for dividends balance at the end. So there we have our dividends paid. Okay, so now for you to choose which method to use, it will depend on the information given to you. With certain information, it will be very difficult for you to use a certain method compared to another method. Okay, now let us move on and look at the next item. We are now done with our operating activities. We can now step off operating activities and how those figures are calculated. And then we are now moving to our investing activities. Why was I discussing all of this? So that when we do an activity, it becomes easy, because an activity we are going to do today will be requiring you to calculate operating activities total. Okay, so we need to know how to get the figures and where to get the figures for these items. Okay, now let us move on. We are now looking at the purchase of fixed assets. Okay, now which figures do we need for the purchase of fixed assets? We need the opening balance of fixed asset at carrying value. What is this fixed asset at carrying value? I am referring to these. I think this will make sense. Carrying value. This is land and buildings. This is equipment. This is vehicles. This is just an example. If here I have my 50,000, 10,000, then I will have my 40,000. Okay. If here it's 500,000, then the answer there will be 500,000 for vehicles. Let's say I have my 40,000 and my 30,000. This will become 10,000. Now, what do I mean by a balance at current value? It is the 500,000 plus the 40,000 plus the 10,000, meaning this 550,000 becomes my fixed asset at current value. What am I saying? I'm saying for you to get the fixed asset at current value, you must take the current value of land and buildings plus the current value of the vehicles or equipment and then the other asset. Meaning land and building carrying value plus equipment carrying value plus vehicles carrying value. Great, Charles. I hope you're still following. And then depreciation. This is the depreciation of both the vehicles and the equipment, provided we have these items. Okay. Now, disposal at carrying value. How do we determine the disposal at carrying value? This will be the cost. Just clear this so that it becomes clear. How do I determine the disposal at carrying value? It will be the cost of the sold asset minus the total accumulated depreciation of the sold asset. That is how I get my disposal at carrying value. Lastly, I will have my balance at the end for fixed asset at carrying value. Meaning, for me to get the purchase of fixed asset, I'll have to add the balance at the beginning for fixed asset at carrying value, subtract my depreciation, subtract my disposal at carrying value, subtract my balance at the end for fixed asset at carrying value. That is for my purchase. Now we must expect this question also, just like the other questions we have dealt with, or items we have dealt with. Now let us look at how to calculate the sale of fixed asset. How is this calculated? Which figures do we need? We need the balance at the beginning for fixed asset at carrying value. We need also the purchase of fixed asset, meaning we add these two items. The items in navy are going to be added together. And then we subtract the depreciation. We also subtract the balance at the end at carrying value. Some learners may decide to say depreciation plus balance at the end at carrying value for fixed asset minus balance at the beginning for fixed asset at carrying value minus the purchase of fixed asset. That is how we get the sale if it's not given. Okay? Next one. We now look at the decrease or the increase in investment. Remember, this is also part of our investing activities. Which figures do we require for us to calculate these increase or decreases in investments? We need just two figures. We need the opening balance of these investments of fixed deposit. We also need the closing balance of these investment of fixed deposit. So we just subtract the balance at the beginning minus the balance at the end, and then we will determine whether we have an increase or a decrease. Meaning if it's 5,000 at the beginning and then 3,000 at the end, now we say 5,000 minus 3,000, we get a decrease of that particular 2,000 rand. Okay. Now let us move on. Very important. I want us to note something now. An increase in investment becomes an outflow. The purchase of fixed asset becomes an outflow too. A sale of fixed asset becomes an inflow because we are getting the money. Now, why is an increase in investment an outflow? Because you take your money, you invest it somewhere. So your investments are growing, but the money in your bank account is dropping. So it becomes an outflow of cash. Now, what about the decrease in investment? Let us look at that. What about that? Is it an inflow or outflow? Some of you got it right. A decrease in investment will now become an inflow of cash. Why is it an inflow? Because if your investments are decreasing, then it means that you are getting back your money. Now, let us look at the net change in cash and cash equivalents. Your net change in cash and cash equivalents, we are going to look at that now. Which figures do we need? We will need the opening balance and the closing balance. And then let us look at the different scenarios here. For the net change, don't forget what we need to do at all times. As I indicated earlier on, we need to subtract the bank overdraft. Now, let us work out the net change. What we need to do here, I want us to calculate the net change for these different scenarios. What is the rule here? The rule is very simple. First of all, we first subtract bank overdraft That is the first rule. Number two, we are going to look at rule 2. This rule says that we are going to apply or implement rule number 2. There are 2 rules here. If the signs are the same. Which signs am I talking about? I'm talking about cash and cash equivalents at the beginning and cash and cash equivalents at the end. If signs are the same, then subtract them from one another. We subtract them from one another. This is an easiest way of winning here. Remember, we are on the last push. We are coming to an end of our revision. What we need to do here, we need to find easier ways of getting answers here. So for me to calculate the net change correctly, for me to determine the 40,000, I would have subtracted. Meaning I would say 40,000 minus the bank overdraft. This time the bank overdraft was 0. Okay. And then same thing with the cash and cash equivalents at the end. It is the 70,000 minus the bank overdraft. Then it's 0 this time. So it becomes 70,000. Now, I apply the rules now. If the signs are the same, I subtract them from one another. Why is that? It is because of this. If they are shown as positive, it means that they are on the debit side, meaning the opening balance is here as 40,000. Closing balance. Remember the rule we learned in under tax paid. If the closing balance is shown as a debit, these two are debit, because they are positive. If it's debit, the signs are the same. Then you are going to do what? You are going to put 1 on the other side, which is 70,000. Why is this? Because this money must come down here to be positive. So from the debit on the debit side, from the balance debit on the debit side, and then to the credit balance carried down. Now we don't consider this, so these two are now shown on the opposite side. That is why we came to the rule to say that if sides are the same, then we are going to subtract them from one another. Now, how am I getting this now? I would say 70,000 minus 40,000. Then we'll get the answer to be how much here? 30,000. Now, remember this? You subtract them from one another, and then we keep the sign of the closing cash and cash equivalents. We subtract them from one another, and then we keep the sign of the closing. So it's 40,000 minus 70,000, or 70,000 minus 40,000. And then the answer will become a positive. Can we now look at scenario number 2, so that we ensure that we did grasp this? Now, scenario number 2, both of them are negative. Both of them are overdraft. Both of them are overdraft. What do we see here? Signs are the same. If signs are the same, I do what? I'll have to do what? Minus them from one another. Okay? Now, meaning what am I doing here? I would say 70,000 minus 40,000 again. Why is this? Because the signs are the same. So I will get 30,000. And then we minus and do what? Keep the sign of the closing. What is the sign of the closing, grade 12s? The sign of the closing is an overdraft. So we put this in bracket. Why am I putting this in the bracket? Because I'm taking the sign of the cash and cash equivalents at the end. Now let's look at the next one now. Next one now becomes the opening is a plus, the closing is a minus now. Or let me put this is a debit and this is a credit. Signs are not the same now. What do we do if signs are not the same? Here, the signs are not the same. Not the same signs. If signs are not the same, you do what now? You add, because this is accounting, it's not math. So we add. We have proven that using the T account. Why are we saying this? Signs are not the same. So meaning, what am I doing here? I would say 40,000 plus 70,000. Signs are not the same. I add. And then I do what? Still keep the closing balance sign. So I keep the sign of the closing balance. Meaning my answer now becomes 110,000. Now the 110,000 will be what? Negative. Other learners can use a button up to say that 70 plus 40, because you are now going up. You add the 2. If you're going down, you subtract. So 110,000. And then it will become what? A negative. Why a negative? Because the closing balance is a negative. Grade 12s, please ensure that you study the scenarios here. Same way as you would study the scenarios on the text page. Now let us look at the next one now. The opening balance is a credit. The closing balance is a debit. Signs are still not the same. Signs are not the same. What do I do if signs are not the same? I add them together to get my net change. So meaning I will say now 40,000 plus 70,000. Then my answer becomes 110,000. Now my 110,000 will now be what? Negative or positive? Outflow or inflow? It will become an inflow because my closing is positive. And then my net change will also be positive because of it. If my closing was negative, then my net change also becomes a negative. Now, for you to decide on the sign of the net change, you must look at your cash and cash equivalents at the end. Grade 12s, I hope you're still with me. Soon we are going to be doing an activity where we get to experience some of these to see if we have done them correctly. Now, let us look at our financial indicators formula sheet. We are going to look at this sheet now. Profitability and operating efficiency. What do we have under this? Let us look at that. These are our financial indicators under profitability. You can see we have 6 of them. Can we name them? The first one, what do we call the first one? Yes, this is the percentage gross profit on sales. Please, you must play this game with your friends for you to know this. Remember, they will give you the formula sheet at the back of your paper 1 and paper 2, but you must know what is the name of that so that you'll be able to use it for your calculation. Let me look at this one. This is what we call as the markup achieved. or the percentage gross profit on sales. The first one is percentage gross profit on sales. The second one is the percentage gross profit on cost of sales. We have also the net profit before tax on sales. Net profit before tax on sales percentage. And then we have the net profit before tax on sales. We also have the operating expenses on sales, as it says. The word on means divide. We also have the operating profit on sales. Now, when they say comment on operating efficiency, there are two financial indicators to quote. That will be your operating expenses on sales and your operating profit on sales. So, meaning when they say comment or calculate indicators under operating efficiency, these are the two. And then now let's look at the solvency. The formula for our solvency says total assets is to total liabilities. Okay? Now liquidity, we have this one. What do we call this financial indicator? Yes, someone got it right. This is our current ratio. Please ensure you play this game. Give your friend a formula sheet. Your friend must name and say that this is current ratio, this is asset test ratio, this is ROTCE, this is ROCE, and so on and so on. Please ensure you play that game. Now the next one, what do we call the second one? This is called asset test ratio. Now we still continue with our liquidity. What do we call this? This is also part of our asset test ratio in a simplified manner. Okay. The next one, the one that says average trading stock over cost of sales. This is called stock holding period. And then what is the next one? This is the stock turnover. The plan for today is to ensure that you know your formula sheet, because it doesn't help for us to do a lot of calculations, but you cannot interpret the formula sheet. So we are going back to the basics now to close the gaps, because some of us are not performing well because we still have gaps in our basics. So we are trying to close now these gaps in our basics. What am I trying to send? What is the message I'm sending to all of you in Free State? I'm trying to say that as you prepare for your exam, please ensure that you know your format, you know your financial indicators formula. Okay. Now the next one is average debtors over credit sales. So this is our debtors collection. We also deal with this one in paper 2, remember? And then average creditors over cost of sales. This is our creditors payment period. Payment period. Now, grade 12s, remember, they are information. There's a fine print regarding the two now. We are going to look at that just now. Now we are saying about the trading stock. Trading stock at the end of the financial year may be used if required in a question. Credit purchases may be used instead of cost of sales. The figures will be the same if the stock remain constant. If there's a change in the number of issued shares, we are going to look at that later on, the financial indicators under this. Then we are going to use the weighted average. Right, gearing. What is the indicator under gearing? This is the net profit before tax plus interest on loans. We call this as our ROTCE, ROTCE. That is the return on total capital employed. That is the gearing. Meaning, when we discuss our next lesson, we are going to be focusing on how do we comment on gearing, how do we tackle questions under gearing. Now, what is the financial indicator under risk? This is our debt equity. There is the formula. Non-current liabilities is to shareholders' equity. Now, returns, there are many financial indicators under returns. There are many. Let's just look at them. We have the net profit after tax divided by average shareholders' equity. We are going to be doing a calculation on this one. This is the ROSHE, ROSHE. This is the return on shareholders' equity. And then we also have another one, the net income after tax divided by the number of shares. This also is our NAV. Okay, sorry, this is our EPS, meaning that is earnings per share. Okay, right. Now, these are our returns, meaning when they say comment on the returns, you quote the ROSHE, you quote the EPS. And then we have also the interim dividends over the number of shares issued. And then we have the final dividends over the number of shares issued. We also have the dividends payout rate. This one is dividends payout rate. So if they say calculate the dividends payout rate, it is dividends per share over earnings per share times 100. So the answer is in a percentage. The other ones, answers are in cents. Okay. Now, dividends for the year divided by net income after tax. These are all parts of returns. And then we also have the dividends for the year divided by the number of issued shares. This is DPS. The other ones will be the total dividends, total final dividends, total interim dividends. Okay. Now, grade 12, let us look at one activity where we are going to be brainstorming a lot of items we've been talking about today. So this will be our closing statement as we look at this activity. So we have activity 1. We are now looking at the NSC November 2023 paper 1. So this is the paper that was written by learners last year. Now this is the information given to us. Firstly, we are going to be reminded on how net ordinary share capital note looked like. We are going to do the cash flow from operating activities. We are going to do cash flow from financing activities for 6 marks. And then later, we are going to be doing calculations on the net asset value per share, dividends payout rate, percentage return on average shareholders' equity, which we all call as ROSHE. Okay, so this is what we are going to be covering now. Now let us move on. This is the additional information. We have information A, B, and C. We are going to later break it down into smaller pieces. You can look at that. So don't worry, grade 12s. We are going to be looking at information A and apply it where it's relevant in our question. I hope you have your worksheets there to look at that. And then we also have information D as well as information E. Now, let us look at the worked solution now for this. First of all, we are calculating ordinary share capital. I am going to explain how did we arrive at these answers for ordinary share capital. Now, for our ordinary share capital, remember how our format looks like. It has the shares in issue at the beginning, plus the shares issued during the year, minus the shares repurchased. Okay? And then we will get the shares in issue at the end. Okay? Now, let us look at from the information given. We're given on our information that on 1 March 2022, 1,200,000 shares were in issue. So we put that 1,200,000 shares in issue on 1 March. Okay, now where do we get the 7,200,000? We have also another additional information about share capital. The 2022 figure is 7,200,000. So the figure is just given on our information. And then additionally, They've said that on the 30th of June 2022, an additional 300,000 shares were in issue. So we have the 300,000 shares issued during the year. Now, we are not given that they are issued for how much. We are going to come to this, meaning this may become our balancing figure. So this will become our balancing figure. Now, next one on the 1st of December now, this is the transaction on the repurchase. Let us read it together. 90,000 shares were repurchased from a retired shareholder. He was paid 80 cents. Please note it. 80 cents above. Remember, once we say above, this above means the retained income, meaning it's an extra. Average means the ordinary share capital amount. So we know the retained income, we know the above amount, okay? And this person would no longer qualify for dividends. So we'll look at that later. Now, how do we work this one out? Now we must first do what? Calculate the average price. How do I calculate the average price in this case? Remember, I am supposed to be taking the value at the beginning plus the interim, plus the shares sold. But the 2,700,000 was not there yet. Now what do? I use the closing number because I do have the closing number. So it is going to be 9,306,000. There is my closing number, closing value. And then divide by my closing number. How did I get the closing number of shares now? I said my 1,200,000 plus my 300,000 minus my 90,000. These items were just given to us. We had these items. Obviously, all of these items are there. So it is the opening number of shares plus the shares that are issued minus the repurchased shares. Okay, now this we get as 1,410,000. Now when we divide this, we get 6 rand 60. So this goes to ordinary share capital. There is the 6 rand 60. Now for me to get my average, the amount for the repurchase, now I say my 90,000 multiplied by 6 rand 60. Then we get the 594,000. It must be inside the bracket. From there, grade 12 is very important. We must apply the bottom up. Now for me to get the 2,700,000, now I will say 9,306,000. Now, because I'm going up, let me just clear this so that it becomes clear to everyone. Because I'm now going up, the 594 becomes a positive. If I'm going down, the 594,000 becomes a negative. Meaning that 7,200,000 becomes now a negative. If I'm going down, it is a positive. Now, what am I doing now? I say 9,306,000 plus 594,000 minus 7,200,000. And then I get my 594,000. Okay, that becomes our shares issued value. Now let us move on. We are now going to our second part. Second part, they said we must calculate our operating activities. This is the information given to us. We are going to break it down now. They are saying interest capitalized for the year is 117,600, meaning that is our interest expense. Shareholders for dividends, we are given shareholders for dividends at the end. We are not given the ones at the beginning, but we are given the final dividends per share. We are given the interim dividends per share. And we know our closing as well as their opening number of shares. Now, how do I calculate my dividends paid now? I can now use my formula. Remember, earlier on, we have learned how to calculate dividends paid. Our formula says dividends at the beginning plus interim. Now, how do I get my dividends at the beginning? I am given the number of shares at the beginning. So I would say 1,200,000 times by the final dividends at the beginning from last year. The closing from last year, which becomes at the beginning for this year. Okay. Now, here what am I doing now? I am taking, this one will be my at the beginning. So my 24 cents is written as 0.24. Okay. Plus my closing now. Because they said earlier on that those where we bought back shares will no longer qualify. Now we'd say 1,200,000 plus 300,000. This gives us 1,500,000. Okay. Now we say multiply by the 0.30 or 30% or 30 cents. So when we add the two, then we'll get an amount of 738,000. Okay. So we have our dividends paid now. Interest paid, cash generated is highlighted in gray there. So if it's highlighted in gray, meaning we don't write. Do not write here. So meaning interest paid, where is the interest paid? There we have it. It was given on the information. That is our interest expense, which also becomes our interest paid. Dividends paid, there is our answer. 1,200,000 times by 24 cents becomes 288,000. 1,500,000 times by 0.30 becomes 450,000. Now, 288,000 plus 450,000 gives us 738,000. Okay, now grade 12s, this is how we get our first two items for the operating activities. Remember, we now know the format, so it becomes easy for us to work. And we also know which figures to use for me to calculate dividends paid. Now let us look at the second part now. We are going to be calculating our tax paid. This one is what we have also learned. Now for my tax paid now, how do I calculate my tax paid now? We can use a T account or just a straight line format. Remember, if I'm using my T account, I am given my net profit after tax. Now remember, what did you learn? You have learned that the net profit before tax is always at 100%. Okay? The tax percentage, this time we are told it is at 27%, meaning the net profit after now will be 100 minus 27. What is that? Let us look at that. Okay, so we say 100 minus 27, we get 73. Meaning the net profit after tax becomes 73. Now, what is going to be my calculation now? I will now check which figure am I given. I'm given the net profit after tax. So now it's 912,500 multiplied by, because I'm looking for tax, 27 goes up. Remember, amount given multiplied by the percentage you want over the percentage you have. So over 73. So 912,500 multiplied by 27 over 73. Then we get the tax amount to be 337,500. There we have it. It is shown as a minus because I've told you that this must always be a negative. Now, balance for 2022, this is our opening now. This is at the beginning, this is at the end. It is shown as a debit. you also put it on the debit side, 42,500. And then the closing one is shown as a credit. If the closing is shown as a credit, it means that you need to record it as a debit. Okay, remember we've discussed that rule. So this is 27,800. Okay, so we're just going to go back a little bit. 27,800. Now remember, what is on the debit side is a plus, what is on the credit side is a minus. That is why we have 42,500 plus 27,800 minus 337,500. And then we get our taxation to be 267,200. Okay, now that is our answer. There we are given all of these figures. Now with the interest paid, the dividends paid, we did discuss these and then earlier on. So we are now done with our operating activities. Now the repurchase of shares now. How do we deal with this? We are given, remember we have calculated the shares issued, so we just record it there, 2,700,000. Repurchase of shares, remember the one we record under cash flow will be the total. Total coming from what? Ordinary share capital plus the retained income. Now, how do I do this? We take the number of shares multiplied by the 660, which is ordinary share capital, plus the 0.80, right? There is the 0.80, there is the 660. So now meaning we say 660 plus 0.80, there is 7.40 multiplied by 90,000. Then we get 666,000. So meaning we have 666,000 here. Okay. That is our financing activities, repurchase. Remember, what are we learning here? We take the repurchased amount for the retained income plus the repurchase amount for the ordinary share capital. And then change in loan. For the change in loan now, we are given the information balance at the beginning. There are two ways of doing this. We can use the interest, the installments minus the interest. We are going to look at this just now. So we can take the 273,000. So we say the monthly installments of 22,750 multiplied by 12, we get the 273,000. These are our payments as stated here. Monthly payments includes interest of 22,700. So now we can say monthly payments minus interest, and then we get our change in loans. So as you can see, it's a decrease here, so it becomes an outflow. Funds used to repurchase shares is also an outflow. Now we say 2,700,000 minus 666,000 minus 155,400. Okay. Now we are looking at the last two financial indicators now, the net asset value. How do we calculate the net asset value? We say shareholders' equity divided by the number of issued shares. Now, shareholders' equity, the amount is given for 2023. We are doing for 2023, 10,200,000 divided by the number of issued shares, 1,410,000. We have calculated that, right? And then the last one now we are doing is the Roche. For the Roche, it is there is our formula, and then our calculation would be 912,500, which is our net profit after tax, divide by, we say 10,200,000 plus 7,985,500. Then we divide this by 2, our final answer becomes our 10.0%. That is our Roche calculation. We are going to be doing more calculations next time in the comments. Now, grade 12s, we have come to the end of our lesson now. Thank you for watching this lesson. Goodbye.